$251 million has been withdrawn from crypto funds. Last week, $251 million was withdrawn from cryptocurrency-based investment products. The outflow of funds from cryptocurrency funds continues for the fourth consecutive week, according to CoinShares' weekly report. From the new Bitcoin exchange-traded funds, ETFs, launched in January this year, $156 million was withdrawn last week. CoinShares analysts noted that when the instrument just started operating, investors paid around $62,200 per Bitcoin on average. Over the past 7 days, the cryptocurrency's price has dropped below $57,000, which could automatically trigger sell orders. In the event of a BTC price drop below a certain level, all investors' assets in spot Bitcoin ETFs will be sold automatically. Regionally, the outflow was mainly concentrated in the USA, $504 million. Negative dynamics were also observed in Canada, Switzerland, and Germany, with $9.6 million, $9.8 million, and $7.3 million withdrawn from funds in these countries, respectively. The most significant event last week was the successful launch of spot ETFs on Bitcoin and Ethereum in Hong Kong, as stated in the report. Since trading began, these funds have attracted $307 million. Bitcoin-based products led the outflows, $284 million. Meanwhile, funds focused on BTC were the only ones where negative dynamics were observed over the past 7 days. For Ethereum-based products, a 7-week streak of outflows finally ended. Last week, they collectively received $30 million. Polygon continues to consolidate. Polygon has been in a consolidation phase for a long time and is waiting for a trigger that will help it break out of this phase. It seems that Polygon investors will have to wait a while longer for a breakthrough, as significant resistance is hindering Matic's recovery. The price of Matic is testing the upper and lower boundaries of the consolidation range in which it is currently stuck. Meanwhile, the Relative Strength Index, RSI, which identifies overbought or oversold conditions in the market, is in the red zone. Currently, it is not oversold but shows a bearish sentiment, being below the neutral line of 50.0. Furthermore, even if Polygon starts to show bullish signals, the price may face resistance from investors. According to the on-chain indicator Global in /out of the money, GIOM, about 1.05 billion Matic tokens worth $735 million were purchased between 71 cents and 77 cents. Their owners are still waiting for a profit. Given that the upper boundary of consolidation is at 74 cents, Matic must continue to rise for these coins to become profitable. If the altcoin cannot do this, it will likely continue to consolidate, which is a probable outcome. The price of Matic has failed for the 4th time in the last 3 weeks to break the resistance at 74 cents. It is likely that the altcoin may trigger another decline, especially considering the strong resistance mentioned above. This could lead to Matic consolidating in the coming days and its price dropping to the support level of 64 cents. However, if the bearish sentiment intensifies, Polygon could break this support and reach a minimum of 60 cents. On the other hand, if the wind turns bullish, the price of Matic could break out of consolidation and attempt to turn the 80 cents level into support. This would also make the offering of 1.05 billion Matic profitable, refuting the bearish scenario and potentially allowing the price to continue rising. Investors reassess Bitcoin's volatility. As Bitcoin becomes a significant element of investment portfolios, market participants are revising their views on the opportunities and risks associated with the main cryptocurrency. Analysts at Fidelity compared BTC with other popular assets and found that it is less volatile than many traditional investment instruments. Many investors still consider Bitcoin to be much more unstable than traditional assets. However, recent data indicate that its volatility may be lower than previously thought even compared to such well-known stocks as Netflix. Over the past 2 years, BTC's 90-day realized volatility has averaged 46% compared to 53% for Netflix. This trend marks a significant shift from previous, more volatile price movements and indicates that Bitcoin is gradually maturing as an asset. This may indicate growing confidence that BTC is maturing, which has been further reinforced after several spot products were approved in the U.S. The anticipation of this event could have led to a sustained price increase, 150% in 2023, and a sustained decrease in realized volatility, 20% in 2023, write Zach Wainwright and Chris Kuiper, analysts at Fidelity Digital Assets. Fidelity Digital Assets researchers also highlighted that as of October 2023, Bitcoin's volatility was lower than that of 92 S&P 500 stocks, including many high-capitalization stocks. The market often overestimates implied volatility, which remains higher than actual realized volatility. This gap suggests that fears of BTC's instability are greatly exaggerated. A similar story was observed with gold. Initially, the price of the precious metal was highly volatile, which stabilized as markets adapted to its status as an independent asset. The dynamics of Bitcoin's price reflect this model, indicating that it may be on a similar trajectory leading to stability and significant growth potential. While past results are not a guarantee of future outcomes, investors have historically encountered significant price increases over short periods when circumstances similar to these were reviewed and subsequently breached historical price highs. After the BTC halving, historically, growth continued until realized volatility reached a level where the price became overheated, concluded Wainwright and Kuiper. Dogecoin price forecast, a new 25% surge on the horizon. At the beginning of May, the price of Dogecoin dropped to a low of 12 cents but then recovered from it. Currently, Doge is stuck below the 16 cents barrier. However, the popular meme coin has the potential to surpass this mark. There is a surge in bullish sentiment among investors regarding Dogecoin. The open interest, OI, for the coin has increased by nearly $200 million over 2 days. Open interest represents the total number of outstanding contracts on various derivatives such as options and futures at any given time, reflecting market participant activity and liquidity. Theoretically, an increase in OI could also be associated with an increase in the number of short contracts. However, given the positive funding rate, it can be assumed that there is currently a growth in long contracts. A rally could start soon, as despite the recent recovery, Dogecoin still has significant room for growth. Only 83% of the total circulating supply of Doge is currently in profit. Typically, an increase in profit indicates potential sales. However, this occurs when an asset forms a market top. Meanwhile, Dogecoin is far from a market top, which usually occurs only when 95% of the supply is in profit. Dogecoin has encountered resistance at the 16 cents level, which has been tested multiple times in the past. If it turns into support, the price could reach 18 cents, which blocks the coin's path to 20 cents. Overcoming these barriers will condition a 25% rally, helping the price recover recent losses. However, if this resistance cannot be breached, Dogecoin could fall to 15 cents. Losing this support could drop the price to 12 cents, weakening the bullish scenario. Digital asset issuers withhold information from investors. Gary Gensler stated that the answer to the fundamental question, how can we ensure the protection of the American crypto investor, depends on cryptocurrency companies that ignore the regulator's requirements. Many of the tokens are, according to legislation and the opinion of the Supreme Court, securities. Right now, American crypto investors are not receiving the required or necessary information from issuers of digital assets, and various intermediaries of this fairly centralized market typically do what we would never allow anyone to do on the New York Stock Exchange. When a CNBC host asked Gensler whether Ethereum could be classified as a security or a commodity, the SEC chairman avoided a direct answer. He only specified that this issue is under consideration by the agency's expert committee.